Oh, it's 8:30 now. 22 here before 9. Digital analog, the clocks say different things. Fuse the disc jockey. Go ahead. Time check in on your money and see how Wall Street's doing today. And one of those light days in which three events are going on that are driving us, but not a lot of news items. Phillip Statler is in his office at Statler Financial Services in downtown Sebring. Phillip, good morning. Are you staying warm today?
Good morning, Dave. Hey, so far so good. You know, it is a little chilly outside, but I'm managing to stay warm.
I was whining earlier on the air about, we haven't had the extremes this winter that we're used to getting. We haven't had one freeze yet so far this year. I may have a bumper crop of mangoes off of that, but this continuous lows in the 40s, my house just is never getting warm. I've run the furnace more this year than I have for the last 10 years combined, and we haven't even had that January freeze yet. I'm starting to get nervous about February.
Well, all I can say is I hope it stays cold long enough to kill the dadgum mosquitoes.
I'm up for that. With that, we're going to be 100% in agreement. We mentioned a pretty slow day news-wise today. The top of the hour news has been yammering about this a lot over the weekend. President Trump started saber rattling again. His conservative base was having a hissy fit over his agreement with the Democrats to reopen the government without a hard and fast agreement to build the wall. So he's responded over the weekend to placate them by saying, "Don't worry about it. I'll shut this turkey down in the middle of February." And he said it's less than 50% chance that he's going to get a deal. And that's not helping the mood of investors on Wall Street one tiny bit, is it?
Well, I think you take that along with Caterpillar and what some of the analysts are saying about looking forward in 2019. I think all that's probably weighing on the market this morning.
Kind of an owly start to a Monday. You alluded to Caterpillar. That's the one real notable earnings release we've gotten, kind of falling in line with a bunch of other multinationals. They're saying China's not helping us one tiny bit, right?
No, they're really not. And so Caterpillar really is blaming it on the tariffs. They came in at $2.55 a share for earnings. They were expected to come in at almost $3 a share. So that's a pretty big miss on that side. Now, revenue was basically in line with what was expected. A tenth of $1 billion more than what was expected. Not a big deal there. And their revenue was 11% higher than a year earlier. But we're still seeing that miss, and they're blaming it all on China and the higher tariffs there. And so they're getting less orders from China right now.
And that's the thing that we've been harping on for a long time. The Chinese economy, even if the governmental release is right, and we all kind of look at that with a big grain of salt, 6% growth isn't enough to keep China going. So the price that we're exacting from China with this tariff war is starting to wreck their economy before it wrecks ours. But now we're starting to see the hiccups in ours, and it's not something we want to see.
No, it's really not. But and the Caterpillar is a big part of the Dow 30. So you can expect that that's causing a lot of the downfall right now that we're seeing pressure on the Dow.
Yeah, one of the tip sheets I was reading this morning said that Caterpillar alone will account for about a 40-point drop on the Dow Jones Industrial Average, which once again probably emphasizes the reason why you lean as heavily as you do on the Standard & Poor's 500. Number one, it's capitalization rated, so one company can't completely destroy the index, but it also has a ton more stocks involved.
Yeah, that's true. It really does. Now, I'm looking at Caterpillar right now in their early morning stock trades. They're up on Friday by about 3%, but right now, this morning, they're trading down about 6% before the market opens up.
And that's a pretty substantial number of points when you look at a $130 stock, isn't it?
Yeah, it really is. About a little over $8 a share.
It doesn't help a bit with a price-weighted index like the Dow by any measure. Got to make note of one other thing that's going to cause the week to be a wee bit more herky-jerky. The 1st of February is Friday, and the federal government scheduled for this week's release of data on an otherwise very quiet week. We aren't going to get the monthly unemployment rate and that market-moving information they give us every month at the beginning of the month until 1:30 on Friday afternoon. Can you imagine being a macro-sensitive trader on Wall Street and making all your adjustments between 1:30 and 4 on Friday afternoon. Do you think it's going to be a volatile Friday, Phillip?
I think it could be very volatile. You're right, Dave. It really could be. Now, the other thing I'm looking at that I find interesting this week is Wednesday's going to be kind of a good day. Well, at least for an economic standpoint, is getting some information, because that's going to be the first advanced reading on the GDP for the fourth quarter. So, that's supposed to come out at 8:30 on Wednesday. So, looking forward to seeing what that number is going to look like.
And that's interesting because it's the thing that we've been talking about all along, indications that our economic growth rate isn't stopping. It certainly isn't going backward, but how fast is it growing now? Are we leveling off a little bit or a lot? And that's one of the things we'll find out an indication of on Wednesday.
Yeah, it really is. And so that and then Friday's unemployment, well, we're not going to get to talk about that because it's not going to come out until after you and I are done off the radio. But, hey, maybe that'll be Monday's topic.
I suspect. And I also suspect that adds a little additional weight to the ADP and the first-time claim figures we'll get on Wednesday and Thursday, right?
I think so. The other thing that I saw, one of my tip sheets that I normally look at hadn't come out this morning. I don't know what their problem is today, but I found this interesting. The J.P. Morgan's co-president says that, how bad December was. Mm-hmm. Well, he expects that you should expect to see more of those throughout 2019.
And when you think about it, intuitively that makes sense. As long as we're throwing rocks at people across the ocean and saying we're going to beat you up with tariffs, oh no, maybe we won't. Oh yes, we will. Heavens, being a day trader or being one of the guys that manages those big funds that throws gobs of money around, I got to believe that's a ticket to volatility when we can't really predict what we're going to do in Washington.
Well, yeah, and are we going to build the wall, not build the wall, and are we going to open government or close the government? Those things are going to continue to weigh on this market.
Which means 190 and 200 point changes on the futures in the morning ain't going to be all that different from the norm for the next few months.
That's right. So, hey, I'm looking at this number though too. For last week, basically the Dow was even last week, and the S&P 500 was basically even. So everything was pretty much even last week. But if we look at the 30 days, the last 30 days, mm-hmm. the S&P is up 13%. The Dow's up 30%. The Nasdaq's almost up a little over 15%. So we've seen a nice rebound over the last 30 days.
Fair to say that we effectively bounced off that bear low that we hit a little while ago. The question is, are we going to see a high that's going to get us out of the correction / bear / whatever we're in? And that we'll never know until it happens, right?
That's right. It really won't. And like you've indicated, we're looking at a down day today.
Yep, doesn't look pretty. Let's set the table because Friday was a good day, and I like doing Merry Sunshine stuff. Dow was up by 184 points on Friday. NASDAQ up by over 91. Standard & Poor's was up by 22.5. Everybody was up by well over 0.5%. The NASDAQ really had a party with 1.25% up. Large portion of that was news that the government was going to be opened up. And then Saturday, Trump started tweeting, and everybody went south. 45 minutes before we open up this morning, Phillip, I'll let you give the bad news.
Well, we're continuing to head south this morning, Dave. The Dow's down to 200 points. That's about 0.8%. The S&P 500 is down 17, which is a little over 0.6%. NASDAQ's right in that same range. It's down 46.5, down almost 0.7%. Gold's basically flat right now. Silver's basically flat. And we've got crude oil down 2% this morning to $52.53 a barrel.
I'm kind of sensing a trading range there, aren't you?
Yeah, it seems like it's not really bumping back over that 53, 54 much at all.
And not going down below 50. There's a trading range personified. Overseas, Japan and Asia generally off this morning when they closed. Ditto for Europe. They aren't overly impressed by the president's tweets at the moment either. Phillip, somebody wants to get together with an advisor that can give them an unbiased look at how to protect their retirements. How would I find you on the phone?
Dave, hey, to get an independent perspective on your portfolio and the risk it has, give us a call at 382-0037. Check us out on our website at statlerfinancial.com. Follow us on Facebook at Statler Financial Services, where we repost these broadcasts in case you miss us in the morning. And then Catch us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
All righty, and back here again tomorrow morning, same time on Light with an up-to-the-minute look at what's going on. Phillip, thank you so much. We'll see you tomorrow, all right?
All right, sounds good, Dave. Thanks, man. Talk to you tomorrow.
Be well.